everyone, and thank you for joining us today. Today, we're going to be talking about cash flow, specifically about cash flow traps and how you can help your clients or the businesses that you work for eliminate them and create positive cash flow. My name is Sherelle T. Martin. I'm the founder and CEO of Nitrum Financial Solutions, where we help business owners find the money leaks so they can increase their cash flow and maximize their profits. And today, I am so excited that I get to facilitate a discussion with three amazing cash flow experts. We're going to be talking about some key cash flow points that you can use within your business, again, or with the companies that you work for. And we believe that these tips that we're going to share with you today are going to be vital to your success. Please note that this session is pre-recorded, but we are live and in person and logged in to chat with you in the Q&A. So if you have any questions throughout today's presentation, please use the chat box feature. Before we get into the content, I want to let each one of my panel experts take a quick 30 seconds to give a quick introduction about themselves and tell us who they are in their own words. And so we're going to start first with Trisha, who is a fellow Goldman Sachs alum.
Hi, everyone. My name is Trisha Tate. I am principal of the Art of Money Matters. We're an outsourced CFO services company, and we help growth-minded CFOs, business owners, increase their profits, strengthen their cash flow, and plan strategically for the future. We also focus on making sure that our clients engage in a stronger relationship with their numbers so that they can elevate their impact and choreograph the life that they want.
Awesome. All right. And Judy, you're up next.
Thanks, Sherelle. I'm Judy Otten with GrowthCast. I'm also a fractional CFO. I work with small business owners, helping them grow their business in a fiscally fit way and explaining finances to them in plain English so that they can understand it.
That's very important. Explaining it in plain English is very, very important. And last but not least, we have Martin, who is accompanied by our friend who decided to join us on today's call.
Hey guys, I'm Martin Sitch, CEO of Giraffe. We're a all-in-one financial forecasting platform built for high-growth companies and small mid-market companies. We're also the preferred budgeting and forecasting provider for CPA.com. So we work really closely with tons of outsourced accountants on the side, and that's what I used to do before. And this little guy here, this is Giraffe. So he's my hype man and a little support animal.
We all need a hype man. So thank you all again for being here today. I know how passionate each one of you are about cash flow and about helping businesses avoid the traps that can occur as a result of poor cash flow. So we're just going to jump right in. So we're going to start with our first question, which is, there are a lot of common ways out there that businesses can be aware of where they're seeing cash flow leaking from the business. What are some of those common ways that you've seen with the clients and businesses that you've worked with?
Yeah, there are a bunch of them, but here are some very common ones. First of all, not knowing what it costs to deliver your services. I had a client that did commercial work, wanted to do residential work, knew what price point they needed to be at. But as I started looking at what it was going to cost them to deliver this, they were going to lose money on every deal. So we went back to the drawing board, did some internal optimization. And when they went to market, they did fantastic. They knocked it out of the field. Another one I see commonly is not paying attention to your accounts receivable and letting it get old, just sending out invoices and not doing anything. I think business owners think that this needs to be confrontational. It doesn't, and it works better, in fact, when it's not confrontational. So make sure you're getting the money in the door. Third, not paying attention to memberships and all those, online products that you can buy for $29 or $47 a month. It doesn't sound like a lot of money, but if it's a lot of stuff you're not using, it really can add up. Fourth, being too frugal, a little ironically, but if you're not investing in the people, the equipment, the processes, training that you need to deliver fabulous service and great products, you're really shooting yourself in the foot. And finally, I think it's really important that every business owner knows for each line of business or service or product, what the profit margin for that particular offering is. It gives you a lot of levers when you want to improve your business results.
Those are some great tips. Like, particularly, I always talk to people about, knowing their costs and being able to, because people price their services in a way, they price it because a colleague prices it that way, or because they think, they're scared and they don't want to charge enough. They don't want to charge a higher rate because they're scared someone's not going to sign on for their services. But in the end, they end up the point suffering because they don't have the cash to actually support the business. Trisha, have you had any instances of seeing this, or any other tips you'd like to add on that?
I definitely have. I want to add to your point, Cheryl, of people not pricing appropriately. I think about it in these terms. I say that there are 4 Ks to knowing the quote unquote right price. So one is knowing your customer. The other one is knowing your competitors, which is a lot of people spend time doing that. The other one is knowing your numbers. What are your unit economics? So for each project that you do, what's the cost of providing the service to a client if you're a service-based business? If you're a product-based business, what is the cost of creating that product, right? Before you even slap a price on top of it. And a lot of people use this cost plus model. They just add some random percentage on top of it, but where did it come from? It didn't come from anywhere. So know your numbers. And then the 4th thing is know your worth, right? So that's an important piece. That's more of a mindset situation in terms of managing pricing. But that's what I'd add to your comment there. And then I'd say another place that people eat cash is growth, right? A lot of us have wanted to pivot or grow or extend into a different product line. I see that with clients that I deal with that are more than $500,000, $1 million in revenue. They've been in business a while and they're like, okay, well, I've grown this and done that. And then they get restless and they're like, what else can I grow and what else can I create? And they start, trying to go into another service or another product line, but they didn't factor in that they don't have the cash to do it yet. So that's one place that, people run out of cash really quickly. They start spending on marketing, they start hiring people, and then they run out of cash for day-to-day operations.
Yes, definitely hiring too quick. Not even understanding like what it all goes into the process of hiring, because it's not just about the salary, right? We have all the burden that goes on top of it, the payroll taxes, the insurance, the workers' comp, all of these the benefits, if their company has benefits. There's so much that goes into the cost. And a lot of people forget about all of that. And they just want to kind of hire and grow and move on real fast. Martin, so some people think that some of these things are unavoidable, right? They've even gone as far as to call them like pitfalls. What are some ways that you think they could try to avoid these pitfalls and kind of stay on the right track?
A key thing, like what you guys mentioned just now, was not thinking about all the other ramifications. When you do something, everything will drive another cost in a business. And so really thinking kind of thoughtfully about, planning like what that's going to be, what's the impact on my bottom line, 1 month from now, 3 months from now, 12 months from now. That's, looking at big picture is the biggest, most important part. And we get so caught up in the day-to-day of like, hey, can we get this next, order out? Can we do whatever? That folks need the biggest recommendation I'd say is take a step back, like reflect back a little bit and just think through it. If you take that breather, it'll pay dividends over time.
Absolutely. Taking a step back and kind of assessing things from like a high view, right? Like looking at it from overhead, from a different vantage point, not just from their current space. Great tip.
Can I add 3 things
Absolutely.
to that really quickly? Some other pitfalls that I've seen is that some business owners and the controllers out there would love this. There aren't tight controls or policies or procedures around spending in a lot of businesses. I mean, I literally talked to a client about this today, like their credit card policy, their travel policy, their employee reimbursement policy. There in many places there's no policy. So let's start there. There's no process for who approves. There's no limit put on corporate credit cards. those are the kind of controls that businesses can put in place to just safeguard spending in general. The second thing I would talk about is the product. You're managing inventory. Not everyone has an inventory management system, but I suggest that everyone has one, because then you can check and monitor how long products are staying online before they turn into cash, right? So there's this long lead time between when you need to spend money to get the ingredients, put the raw ingredients together, create the product, then sell the product, then you get the cash, right? So if you don't have an inventory management system, or you don't have an understanding of how many days, how long it takes to go from spending money on cost of goods sold all the way to selling the goods, then it's hard to monitor cash. So that's another cash pitfall. And then the third one I would mention is not tracking cash. I know I use QuickBooks Online very often, love the platform, but it doesn't produce what I would call like a cash P&L, like literally looking at the bank account and seeing what money flows in and what money flows out. And oftentimes I have to create projections. Well, for every client, let me say that, I have to create projections of what we're expecting to come in and what is exactly we're expecting to go out, and what we're expecting to pay off in debt, to pay the owner's salary if they're a LLC, or a sole proprietor, or a sole proprietor. So I would say that's another pitfall, is not really looking at your cash inflows and outflows and projecting them out.
When you mentioned not having any policies like that, like you're tugging at my heartstrings. I have a whole presentation about managing what I call managing PPP, which is policies, processes, and procedures, because I'm also working with a client right now, and it's like they don't really have any policies. They're paying everybody every which way. Oh yeah, we write a check, or sometimes we send a wire, and we do an ACH. Oh, but then there's also all these other apps. We're paying with Venmo, we're paying with Cash App, and I'm like, oh my Lord, my brain is gonna explode. So having good control, good policies in place, which dictates the processes that need to be followed, which then leads down to the procedures that you're going to put in place, which are the task-driven things that helps everything get kind of flow, is key in helping keep cash flow running through the business. So we're going to move on to another question here. So some businesses and organizations, what are some ways that they can optimize some options? And Martin, I know this is like right up your alley. I'm sure Giraffe does all kinds of ways, has all kinds of tools that we can use to help optimize our cash flow.
Yeah, so there's obviously planning it all, like what Trisha mentioned. So many people plan, cash flow is not just like your income statement. It's all the working capital. It's all the stuff on your balance sheet. And so many people forget to plan the balance sheet, and sometimes because they're just scared, and it's also hard to like plan the balance sheet because it flows in and out. But so using tools like that, there's Draft, there's lots of other software tools. Those are always important. And then there's, once you do that though, then there's like the tactical cash flow optimization. So when you look at like each of those different ones, like the stuff that Judy mentioned was, things around accounts receivable. You can do, there's so many like little life hacks you can do for businesses. Like a big one we found was, if you have customers who are purchasing your services every month, give them send an email blast out. If you think your cash flow is going to be a little light, send an email blast out and say, hey, we'll give you 1 month off if you prepay annually, or 2 months off from this run rate. Boom, you just got 10 months of cash flow from that customer. And you can do that really quickly. That's like a super easy one to do in an email, and you can have the lots show up. So that's a really key one that we found successful on that side too.
Judy, do you have some tools and resources you can recommend?
Yeah, I want to add on to what Martin was saying. There's a lot you can do both with your clients, and your vendors with just talking with the relationship around cash flow. You can do things like net 10 with a discount. If you get into trouble, you have a good relationship with a vendor, talk to them about it. Say, hey, I'm having a rough month. They're all small business owners too, so they get it. And if you have a good, solid relationship and you haven't been stringing them along, they're very likely to give you a little grace there. The other thing that I've seen my business owners do lately, A lot of them have gotten PPP and EIDL and still were able to do some business. So a lot of them have cash in the bank at the moment. And they're either keeping that dry, or more interestingly for me anyway, is they're investing it to improve their business for the future. Things like automation, new tools, more capacity, so that their business is even healthier coming out of this weird, crazy time that we're all in.
Yeah, definitely reinvesting is big into the things that are going to help the business kind of grow, help it, do the things that you needed to do and put in place that you couldn't because you didn't have the cash. Those resources are definitely helpful in that way. Trisha, do you have any additional resources? I feel like there's tons and tons of things out there, and we're just kind of touching on the surface of it.
I would say two things. Well, one is I use a cash flow planning tool with my clients. That's, on my website under resources. That's one tool that someone can use to kind of optimize cash flow looking forward. Another thing, which is really understated, and I'm writing this in my book called Dancing with Numbers, is to leverage what I call your dance partners. Leverage your bankers, leverage your lenders. Like, you should have a great relationship with whoever your business banker is. If you're not familiar with CDFIs, community development financial institutions, they were like the financial first responders during the whole pandemic. Have a relationship with them. At least in New York, there are many like Pursuit and True Fund and BOC Capital. But I would say don't underestimate the power of your partners, especially in tough times. I know a lot of business owners finance their business with credit cards, but lines of credit are lower typically lower interest rate. And so if your business is doing pretty okay and you can show some decent cash flow or some decent projections, get a conversation with your business banker or some form of lender, get a line of credit, and look at those lower cost alternatives that are available. So those, I would say, definitely lean on your what I call your dance partners.
I like that, dancing with numbers. I really like that. I think you're a professional dancer, right? Or at some point in a previous life. Yeah.
At some point in my life. Yep. Absolutely.
That's definitely a good play on numbers. This conversation is just going so great. So some other things another question I have, that when I'm working with business owners and dealing with cash flow and working with the organizations, is that, let's talk about how budgeting can play a part into this, right? So a lot of people are anti-budget. They're like, oh, I don't want to do budgeting. It's so hard. How can I do it? It doesn't make sense. All the reasons why they shouldn't. Like, what are your recommendations about when and why a business should definitely use budgeting as a resource to help them increase their cash flow?
This is something that's near and dear to my heart. So I think this is a really great one. And then also, so starting budgeting, it's like so many people, as you mentioned, are like scared to do it or they wince at it. But the big goal is like, ask any of your clients, just start off with like, hey, what's your goal for the year? And then be quiet, let them talk. And then they'll start saying, oh, I want to stay alive for the next year and be cash flow neutral, or maybe I want to double the business, or I want to open a new location, or do, or I want to go from, 1 to 2 million in revenue. And that means we're going to start this new line of business. Then you ask them, well, what do we got to hire for that? What are the people behind that? Do we need to go do that? Do we need to get a bigger location? Do we need to do all this? If you ask those questions, a couple, like, what do we need to do? Do that like twice behind the goals. Then just drop that all into a sheet. That could be a spreadsheet, it could be a tool, whatever, but those are the actions. And that's like what will create the budget for people. And then the outcomes of it are, here's what our numbers look like for, next month, next year. And if you build this muscle up the right way, it becomes like a heartbeat in the business. And when people deviate from that, then you go, why did that change? And is this going to stick around? Because that's a cash flow leak, where you're like, oh crap, we're spending too much on, XYZ tool, or, oh, we hired someone, we didn't plan for it, the right way. So those are the key ones. And if you start doing this right and take 90 minutes every month to take a look at those numbers and look through line by line, you'll actually realize you'll gain these operational efficiencies, and that muscle and that heartbeat will start growing in the business, and it'll become second nature really quickly. And then you'll love that budget meeting.
Anybody else?
Yeah,
Go ahead.
that's awesome tactical information, Martin. I think part of the reason that business owners are afraid of budgeting is that they're afraid they're never going to get it right. And you know what? They're not. It's not going to be exactly that way in the future, but at least you have a baseline and something, as you just said, Martin, when you deviate from that, you can see why, you can see what's going on. So just let go of the need to have it right or perfect or whatever that ultimate thing is for you, and put down your best guess and go play and see what happens.
And that's what it is, right? It's just a guess. It's just a guesstimate of what, and it's a plan of what you expect to do, how you want things to go. But it doesn't mean it's rock solid and that it doesn't change, right? As you go throughout the year, different things
As you
happen.
learn.
Exactly, right? New business comes, some business go, new contracts get signed, hiring people, like all of that. It's not going to go perfect. It's not going to be exact, like you said. But if you have something as a starting point, right, then you have a kind of an idea of what direction things are going, and you can make those course corrections as things try to come up, as things fall into your path. You can make the shift to figure out, how I'm going to, if this is going to be a hit to my cash flow and I need to figure out how to course correct, or if this is going to be a positive impact. Like all changes and effects and impacts are not negative, right? Some of them are absolutely positive. Trisha, what do you have? You have any insight around budgeting and how it can affect and help with making good, positive cash flow decisions?
Well, I'm actually going through this with a couple clients right now, and so my process is you start like Martin, let them imagine their future. And CEOs are always optimistic, and my role as an outsourced CFO is to make sure they don't paint everything with rose-colored glasses. So if they say, I want to double my revenue, I was like, how are you going to get there? Let's work out this plan, and let's translate this into numbers. How many customers do you need? How many sales do you need? When do you need it to come in by? Do you already have that contract solidified? What do we need to do to get there? Like, so I'm not there to I'm not there to plug holes in and bust their bubble, but I'm there as an outsource, as the CFO, to help them figure out, like, how are we going to get there? So projections are a numerical representation of the plan, right? And so we start with the imagination. Then I get them to think realistically about, like, how are you going to get to these numbers? And then we put numbers on top of it. That's how you come up with the assumptions. I would say that if for 1 year, for the first 12 months, it should be straight up cash flow projections. If you're going to do budgeting for year 2 and year 3, you can make some estimates of a growth rate and then apply it and tag it on. But that first 12 months should literally be like, when do you expect that cash to come in and that cash to go out? That's how I would think of a budget. And then every quarter you look at it and you readjust and you do a reforecast. No one foresaw the pandemic happening, right?
Right.
So
right.
it's important. Another thing that I do with my clients is scenario analysis. I literally got off the phone with a client before this, and I was like, well, what happens if you don't get those 3 big invoice payments this week? Can you make payroll next week? Right. So to do a little scenario analysis and play a little devil's advocate, again, to make sure that business owners are not looking at everything through rose-colored glasses.
Right. Awesome. So this has been great, guys. I'm so happy and glad that you decided to have this conversation with me to talk about cash flow and how we can create some scenarios. We've talked about some common ways that money leaks out of a business. We've talked about the pitfalls. We've talked about how to avoid them. We've shared some tools and resources to help businesses and companies optimize their cash flow. And I think all of this has been just valuable to everyone. So if our listeners could take one tip, one strategy away and implement it today? I'm all about like, what can I do right now? I've gotten all this information. What's the one thing that I can do right now? What would your one tip be? Judy, let's start with you.
Yeah, don't take your eye off the ball. Make sure you're paying attention to your cash flow. I know there are so many other things on your plate as a business owner, and finance may not be your favorite thing. If you don't have a right hand that's helping you do this, find one, and make sure that it's getting done. You know what's going on with your cash flow before you get into those, oh shoot, how am I going to make payroll moments?
Yes, good one. Martin, what about you?
Yeah. I think, that one was great, Judy. And then I just add kind of on what we were talking about, have the end goal in mind. So if it's like what Trisha mentioned, a 12-month budget or even next month's goal, you can't, what's the phrase? You can't measure what you don't plan for, or you can't manage what you don't measure. Yeah. So it's like, you got to measure that cash flow. You got to watch it closely and have a goal towards it, and keep looking at it and look at it in whatever window you have line of sight on.
Cool. Trisha, what's your takeaway?
I'm gonna take a bowl from Judy's court. When she was mentioning, make sure that you have like a right-hand person to look at this for you. A lot of time business owners look at their bank account and they're like, okay, if there's money in the bank account, I'm good. If there's no money in the bank account, I'm not good. But they're not factoring in like the receivables that they can be, going after in order to get cash. They're not factoring the fact that federal and payroll taxes haven't come out the bank account yet. So, having a right-hand person in the trenches with you, whether that's a super smart full charge bookkeeper, or you have an outsourced CFO that's looking at the ins and outs on a regular basis, and that has a pulse of it and can let you know, watch out before you get there. That is super key. And then the last thing that I would say is, I use this phrase that revenue is vanity, profit is sanity, and cash flow is reality.
Oh, I like that.
So what that means is, a lot of these hyper growth companies, they quote revenue, right? And you think, oh, Uber is doing billions of dollars in sales. But then you need to worry about profits. As a business owner, you want to make sure that you're able to pay all of your obligations and make your payroll. But at the end of the day, cash keeps the lights on. Like you could have as many profits or expect profits, but if that money doesn't hit the bank account in the time that you need to make payroll, you're dead in the water. So that's what I would leave you guys with.
Awesome. Thank you all for those tips. If you take them in our last couple of seconds, if you want to just let the people know how they can connect with you, if they have more questions or want to inquire about your services or products. Trisha?
Sure. They can reach me at artofmoneymatters.com. You can book a free consultation there. I also have a cash flow planning tool there when you click on resources. On Instagram, Art of Money Matters, and on LinkedIn, Trisha M with Mary, Trisha M Tate.
All right. And Judy?
You can reach me at Growthcast. My website's right there, or on LinkedIn, I'm Judy Otten. Just if you do reach out to me on LinkedIn, say that you saw me here, because I get a lot of unsolicited requests. So yeah, I'm happy to connect. Just let me know where you found me.
Good one, Judy.
Yeah, good point. Very good point. And Martin.
Yep. Come check out giraffe.com. My email is martin@giraffe. I misspelled giraffe when I got the domain, so it's JIRAV. Or you can find me on LinkedIn and just drop a note, as just like Judy said, that you saw our webcast.
Awesome. And if anyone wants to connect with me, I am on Instagram and LinkedIn as well at Sherelle T. Martin. Have to have the T. Thank you all again for attending today's session, and I hope you enjoy the rest of the conference.